Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to my video today, and don't forget to check out my website www.𝘃𝗶𝗱𝗲𝗀.com to find out more about me as an investor, and also don't forget to like this video and subscribe to my channel. That will be really great. Thanks very much, guys and girls. So today I'm going to be doing my usual weekly video where I talk about what happened in the markets last week and also talk a bit about how my portfolio fared and a little bit more about my strategy. So over to what happened last week, especially in the US markets. It was actually a very good rebound last week from both the Nasdaq and the S&P 500. The S&P 500 was up about 3.7% last week, and the Nasdaq was up about 3.5%. And this was a really good rebound considering what happened in the previous weeks. And a lot of this was to do with Omicron, the new variant of COVID-19. And we saw last week, we saw Dr. Anthony Fauci, who is the chief medical advisor of the president, who said that the Omicron variant seemed a lot less severe. Of course, it is very infectious, but they're saying that is leading to a lot less hospitalizations and mortalities. We also heard last week from Pfizer that it's quite likely that a booster shot is going to give enough protection for the Omicron variant. And this is very good because it means that obviously the initial vaccination program that we had around the world, a lot of people have used the Pfizer vaccine, and there is likely to be some protection there from the Omicron variant. Although I know a lot of pharmaceutical companies at the moment are working on a specific vaccine which combats the Omicron specific variant, which is slightly different. Last week, our portfolio did finish relatively flat when compared to the outperformance of the indices. And the reason for that was that many altcoins in the crypto ecosystem actually underperformed last week. Bitcoin actually held up relatively well and has kind of been ranging in that kind of key pattern between about 47,000 to 50,000, but many of the altcoins suffered last week, which put a bit of a heavy weight on our portfolio. However, the major indices are telling a slightly different story to the reality of the overall stock market situation. And that is because the major indices are very heavily weighted in some of the largest stocks in the world, such as Apple, which has done really well recently. So what happens is when those major large cap stocks perform very well, it artificially pumps up those indices because they are very heavily weighted in those stocks. But that doesn't necessarily mean that the other stocks around it are doing extremely well and outperforming. So for example, the Nasdaq is just 2.5% away from its all-time highs. However, only 30% of the stocks in the Nasdaq 100 are actually above their 200-day moving average. And this really tells the overall story. At the start of the Omicron variant, I decided to put in place some hedges in order to protect the downside, which might slightly dilute the upside. And it worked very well last week because the markets were heavily down. However, this week it was a little bit more difficult because the markets were heavily up. And I decided that I was going to short some of those markets which I didn't feel reacted very well to the previous COVID lockdowns or outbreaks. So I'm currently short the India indices as well as the UK indices, the Spain indices, and also the Japanese indices. And these are short-term positions. I'm not expecting them to have a long time. But just because the markets were up last week doesn't mean that the fear and the danger is necessarily all gone. We are still waiting for a lot of results around the efficacy of the current vaccines. We are also seeing spreads of the Omicron variant all over the world, but especially in Europe, and we are seeing fresh lockdowns. So it's a little bit early to party and say everything's over. I hope that the stock markets continue to rally. However, we do have some insurance in place if they don't, and I will keep these short-term hedges on for a while until I feel that most of the danger is eradicated. We also saw some really interesting inflation data last week from the US, and the CPI, which stands for the Consumer Purchasing Index, actually increased by 6.8% on a year-on-year basis for the November inflation figures. And this is actually the biggest jump since 1982. Figures were also released for the core rate inflation, which excludes energy and food, which was at 4.9%. So suffice to say that the inflation figures were very high. However, they were roughly in line with what the expectations were. So this didn't have a negative effect overall on the stock market. However, it is very important that we keep a close eye on this. Our portfolio is set up in order to try to combat inflation as much as possible and take advantage of it. So our portfolio is in a very good place for the future. However, we did see some really good employment data from the US, which showed that less than 184,000 people actually applied for unemployment benefits. And this is actually the lowest number since 1964. We also saw over 11 million jobs that are currently available, which shows strong economic growth and more demand for employers to create new jobs. As we move on to Europe now, and the indices also bounced last week overall in Europe. And again, this was to do with the fears slightly subsiding over Omicron and the effectiveness of current COVID-19 vaccinations on Omicron variant. However, there are Omicron cases popping up all over Europe at the moment, and there is a high number of cases. And this has forced a lot of European countries to put further restrictions in place on its citizens. So for example, the UK have announced something called the Plan B strategy, which stops people from going into the office, makes them work from home. They also need to show the COVID-19 vaccinations when visiting public places, and they also have to wear masks when inside. However, it was just announced yesterday that the UK had gone into level 3, and this is just one step away from level 4, which is the measures where they go into full lockdown. So it's very important that we keep an eye on what's happening overall in Europe and the UK to see whether these cases continue to increase, because there could be continued restrictions that could have an effect on the overall businesses, which is another reason why I have some hedges in place. We're also seeing similar restrictions in Italy, Germany, Ireland and France, as well as Denmark, who have recently added more restrictions as well. So we need to keep an eye on this. It's something that is not completely over. We need to see how this progresses over the winter and see what effect this could have on the overall economy. However, my number one job is to make sure that I manage risk and protect your funds. So I will make sure that I position accordingly to achieve this. There was also a lot of speculation in the market that due to Omicron and the upcoming restrictions, that the European Central Bank would continue to purchase assets well beyond the March 2022 deadline that they had set in place before to start to reduce those asset purchases. This would be very good overall for the European economy and would keep a lot of liquidity and overall buying pressure overall in the market. So we will keep an eye on this to see whether there will be any more announcements from the European Central Bank. As we move on to China now, and last week the Chinese stock market grew generally in line with the global markets overall. However, there was still some fears around Chinese companies listed in the US that they may potentially be delisted. However, this came to prominence obviously when Didi, the ride-hailing technology company, actually announced that they were going to delist from the US stock market. However, this was seen as a totally different case by the Chinese government because they had put a lot of pressure on Didi not to list in the first place, and they didn't listen to them overall because they were just, as we know, they were just about to get a very heavy fine and restrictions in place from the Chinese government for not following and adhering to some of the new technology rules in place in China. However, it is not expected, especially in the short term, that this is going to affect any of the major technology companies such as Alibaba. But it is also important to keep an eye on the regulations in China because they do change very frequently. There was also some news from the property development sector in China, which has been struggling a lot as of late. And the Evergrande Group and the Cassia Group, who are very heavily indebted and have run into a lot of problems recently, announced that they were going to be restructuring their offshore debt. And this is a saga that is likely to continue over time because they owe a lot of money and they're going to have to find a way of either paying that back or announcing bankruptcy. However, I do not see the Chinese government letting them file bankruptcy, and I think that they're going to instead try to help them restructure those debts as well as they can, and also try to invite and aid their sales of any subsidiaries that they have in order to reduce that debt. The People's Bank of China decided again for the second time to reduce the amount of the reserve ratio requirement that was required for banks to hold in assets. And this is generally very good overall for the Chinese economy because it releases over 1.2 trillion renminbi overall into the Chinese economy. The People's Bank of China decided to cut the relending rates for small and medium enterprise companies in order to stimulate some of those small medium enterprises and help them weather the storm from COVID-19. There was also some interesting data released in China which showed that export growth had slowed in November, and this was mainly attributed to a very strong renminbi. When the renminbi is very strong, this makes goods more expensive for foreign participants buying from China. And also there was a lot slower external demand as well for Chinese goods. However, the import growth was a totally different story, and has actually grown by 22% in November on a year-on-year basis. And that is mainly because China needs to replenish as much of their commodities as possible in order to be able to service the demand for goods and services around the world. However, there was some important inflation data released from China last week, which showed that the PPI, which stands for the Producer Purchasing Index, and is also commonly known as factory gate inflation, actually decreased from 13.5% in October to 12.5% in November. And this is mainly attributed to the cooling overall in the energy shortage that they've had in China and throughout the world, as well as the Chinese government also moderating commodity prices. As we move on to crypto now, and last week was again another up and down week for Bitcoin, and it seems to be consolidating in a region at the moment between about 47,000 to about 51,000, and I think it's quite likely for a short period of time to be back in a reaccumulation zone where we're going to have to find more buyers in order to push that price up higher. However, I see 53,000 as a key price point for Bitcoin, not only to break through, but also to sustain for a period of time. And the reason why I say 53,000 is 53,000 is the average entry point for short-term holders. So you're going to see some selling pressure around that range. So it's very important that we break through that to see more upside in the short to medium term future. And I see a lot of copiers and followers say to me, is this the start of the bear market? And to that question, I say a resounding no. And the reason why I say no is that over the last couple of months, as Bitcoin again hit its all-time high, it did not act like a blow off top event. And what usually happens is you see these very sharp inclines in price with very small amounts of pullbacks, and they are very sharp. And we didn't see that. It was kind of more a sustained growth over a couple of months period. So I'm still expecting Bitcoin to break through its all-time highs, but I do think that there's going to be a period of reaccumulation and consolidation before we have the next leg up to the highs. So please stay patient with it. Bitcoin doesn't always continue to rise in price all the time, and we do see some pullbacks, but it is very healthy that a lot of the leverage has been purged out of the market. So this is good for the next leg up. Another important on-chain metric that I've been paying a lot of attention to over the last couple of months has been the hash rate. And as we know, in May, it dropped off pretty severely as the Chinese government put a clamp down on Chinese Bitcoin miners. And what happened was then all that hash rate got distributed around the world as Chinese miners closed off their operations, and that mining moved over to Kazakhstan, which has become a big Bitcoin mining mecca around the world, as well as the US, which took more hash rate. And we've actually seen that the hash rate had actually reached now an all-time high again after those May reduction in the hash rate. So this is really good overall for the security of Bitcoin, and it shows really that Bitcoin is very anti-fragile, that such a big event like China banning mining didn't have a massive effect overall on the hash rate, and the miners simply packed up their equipment and moved elsewhere. So as a very famous analyst said, you cut off one of Bitcoin's legs and it grows too. Last week, it was announced by our favorite Bitcoin hodler, Michael Saylor, that MicroStrategy had bought another 1,400 Bitcoin to add to their overall balance sheet. This takes their overall holdings to over 122,000 Bitcoin, which is a really massive hoard, and it'll be very interesting to see over the next couple of months whether other major corporations will also take a Bitcoin standard balance sheet strategy. However, last week it was announced that BitSmart, a crypto exchange, had been hacked for $200 million. However, this didn't seem to have a major effect on the crypto market overall, as there were a lot of other factors that were weighing on it. However, this is not the first exchange that has been hacked, and it will not be the last. However, it's important that the crypto exchanges continue to put in increased security in order to secure people's funds. However, Solana was the recipient of a denial of service attack, and this wasn't the first time. Back in July, there was another denial of service attack which actually ground the Solana blockchain to a halt. However, the one just a couple of days ago just really slowed down the network. I think it's important to know that in crypto, there is a scale between speed and decentralization, and it is not linear where you generally have both. So what that means is that Solana is a very fast blockchain. So that means that transactions go through very, very quickly. However, this does have some trade-offs. If you want really fast speed, then you are going to sacrifice some decentralization. And I think that is a lot of what happens with Solana. And I think they are going to be subject to the occasional denial of service attack and other disruptions. However, for some services, it's very important that you have very fast transaction speeds. And I think that Solana will continue to be very popular because of this. And we see a very similar situation where something like the Binance Smart Chain is also not as decentralized as some of the other protocols. However, it is very fast and the fees are very cheap. And I don't think it's something to really worry about too much. And I actually took this as an opportunity to take some short-term positions in Solana, which I plan to sell when the market recovers, because Solana generally does very well when the market starts to recover and usually outpaces the other protocols, especially as it had quite a steep pullback over the last few days. Overall, I'm very bullish on the long-term future of crypto. And I think what's happening at the moment is we are in a risk off phase. And I think that's why Bitcoin is holding up a little bit better than a lot of the altcoins, which are higher up the risk curve. So what I see happening over the next kind of couple of weeks is I see a consolidation period for Bitcoin. I think Bitcoin is going to be a little bit more dominant over the other altcoins over the next couple of weeks while we reaccumulate. And I think a lot of the reason of that is around this Omicron variant and the potential tapering of asset purchases by the Fed, as well as the threat of increased interest rates in the overall economy. I think this is going to weigh a little bit on crypto in the short term. However, I think as we start to break that $53,000 mark that I said earlier in this video, and we move much higher, I think that there will be a lot more risk coming into the market, and then we will see the altcoins beginning to fly towards the end of this crypto cycle. So it's something I'm still very positive on, and it's nothing to worry about at the moment. And I will continue to find opportune times to add to our positions, mostly short term, in order to try to mitigate some of that short-term volatility that we feel in our portfolio. Lastly, I want to thank some of my new copiers and my older existing copiers for your conviction in my overall strategy. I realize in the end of November and the beginning of January, it has been a little bit of a difficult time if we had a little bit of a drawdown from my all-time highs, but there has been a lot of mitigating circumstances. The stock market has had a lot of fears around the Omicron variant. There's also been a lot of things that have been happening in terms of the Fed, in terms of inflation, tapering, and also fears around inflation. So these are mitigating circumstances that are weighing on our portfolio at the moment. However, I'm doing my best I can in order to try to mitigate some of those risks that exist in the market. And you've seen that I've been doing a lot of short-term positions overall in crypto, which does help to soften some of the blow when we have some market downturns, as well as some short hedging positions, which I have been putting in place overall for the stock market. So I'm firefighting as well as I can. And what I'm really trying to do is keep our core assets in place, so when growth lays ahead, that we are in a really good position to take advantage of it and see increased growth overall in our portfolio value. So please stay patient with me and give your copy a long time in order to come to fruition. Thanks very much for listening to my video today. As usual, if you have any questions, then please do not hesitate to let me know below. Also, don't forget to join my Discord group, which has a lot of the bees community in place, where we have lots of great discussions around investing and life in general. So if you're not already signed up, then please follow the link overall in this YouTube video to join. Have a great week ahead, and goodbye.